Good evening. This is Ken Long from Tortoise Capital Management, November 30th, 2010. A quick look at the daily trading plan. We've got a market that's in bull normal conditions. It's in the middle of the road on an annual and very close to being oversold on a 10-day basis. The big winners over the last 10 days, Caterpillar, American Express, DuPont, McDonald's, United Technologies in the Dow, gold, inverse SPY, and the bonds of various types in the ETF 100. The 10-day max pain candidates, it's still financials, Bank of America and JP Morgan. And you can see the difference in the sector between Bank of America and JP Morgan as the failures and American Express as the winner. So anytime XLF is up, you want to be looking at AXP first to continue its winning ways. I like Home Depot, Hewlett Packard, and Procter & Gamble in the Dow on max pain. So if I see any kind of outperformance of the market by those three symbols, if they're up on a day the market is going up, that's an easy buy. As you can see, we're almost oversold on a 10-day basis here. Overreaction signal in EFA, the Euro-Asia blend. Channeling the same candidates again as before. Emerging markets, Asia less Japan, and the Euro-Asia blend. I'm very cautious about taking those just because of the overall weakness. I would take them as a day one turbo trade, but mechanically I'm a little concerned that we've got too much weakness here. We can see volatility continuing to sneak up. In fact, the VIX ETF, VXX, outperformed any of the sectors today, even silver, which was otherwise the winner for the day. ADX is down and declining with the red in charge, so we've got a bearish tendencies in this pullback, although the market's trend is clearly sideways. I want to take a look at SPY as an important target right now because it's firing on the 551W, and that means the U.S. sector has been much better than the Asian or the European sector's flight to quality. And I like the fact that our old reliables, Alcoa, Coke, and McDonald's, are all also in the 551W. So if we see any kind of upward movement in SPY, even if it's negative for the day, but if it does a morning hook and we see one of those three outperforming SPY, that's an immediate buy. On the triple screen, ExxonMobil and Intel have been in that condition for a while. They've had good runs up, and there's a possibility to buy them on a measured pullback. Inside our tactical report, the winners for today: Verizon, Walmart, United Technologies, and Caterpillar on a percentage basis. The losers: Pfizer, Cisco, Bank of America, and Procter & Gamble. And I like that Hewlett Packard has pulled back because that gives us a chance to buy quality company on sale. Over in the ETF land, the big winners, gold and silver today, and treasuries, more flight to quality. I mean, look at silver dominating, another 3.3% up today. Still a lot of doji formations in the Dow. You can see these green signals. A lot of the Dow on channeling, 5 of the 30. Triple screen setups in Intel and ExxonMobil. 551W, McDonald's, Coke, and Alcoa, like we saw. Max pain candidates continued to be dominated by the financials at JP Morgan and Bank of America, as you can see, in 1 and 2 position. In the ETFs, also some dojis and channeling signals. 551W in the SPY itself, with max pain obviously being located in Europe, Asia, in the Euro-Asia blend. The 30-day regression line slope continues to flatten out, and the R-squared is almost at 0, so there's hardly any trending data in there. And the slope is back to normal, or the average for the last 180 days. So all that goodness that terminated with SPY up around 123 has been slowly petering away. And you can see that mumbling sideways movement here in the market. Quality basis, Bank of America is still suffering. Its
red on 2 months and red on 1 month, and that just makes it horrible. On the other end, you can see the technology leaders, IBM and Verizon, Johnson & Johnson and Procter & Gamble. Nothing wrong with those as well on a quality basis. Inside the ETFs, natural gas has been suffering. And let's see, what else can we see? Silver, technology, and coal have all been very positive. I mean, the sell-off in coal today may still give an opportunity to buy a good commodity on a rebound, but I would wait to see positive, favorable movement in coal compared to SPY before I would initiate an intraday trade. That's everything I want to look at for the daily report. We got plenty of targets. I think the key is looking at SPY because of that 551W. It's only down 5%, while Europe and Asia have been down 20%, and the U.S. is going to be the first thing to rebound. And if it does, we want to look at going long some of those key technology leaders or the old reliables like Alcoa, Coke, or McDonald's. But again, only if they are outperforming the SPY is that a safe bet. That's all from Tortoise Capital. Good hunting and good trading tomorrow.